Hi everyone, Matt Stuart here with Coldwell, Ronan, Realty. I do educational videos for buyers and sellers and consumers for the real estate market in Simcoe County. If you like the information that we're producing here, please like and subscribe to our YouTube channel. We're interviewing Helen Rutledge with the Mortgage Coach today, and we're going to talk about mortgages. We're going to talk about the pre-approval process and how that all works. Helen, how are you doing today?
I'm great. How's everybody?
Yeah, everyone's doing good. I'm doing well. Thank you for asking. We're going to go over the mortgage pre-approval process. We want to talk about a few different things. Obviously, we're early in the year, so buyers and sellers who are out there looking at making a move, we want to put this valuable information out there for you so that when you come into that market, you know exactly what to do. You're going to know what the steps are, and you're going to be really educated on it. So the pre-approval process, where do you want to start with that? How do people even come about getting pre-approved?
Well, they have an idea that they want to buy a house, and then they come to you and they're like, okay, let's go looking. We want to stop that. We want them to come to us first.
Okay.
Then that way they're already pre-approved when you're taking them out. Nobody's wasting anybody's time. You guys are like, good. If you see something, you're ready to go. That's where we want the process to start.
Now, what's involved in that pre-approval process? Like, what kind of documents do you need? Do you need information about the down payment? Like, what kind of things do you need? And then we can kind of lead into the actual steps through that.
So I'm going to reverse it a little bit here. If I went to you and said, okay, I make $100,000 and I have no debt and I have $20,000, I'm good to go. I'm pre-approved. I put it into like the little calculator online. Let's go.
Great. We get those all the time.
Yeah. So then all of a sudden you're like, okay, you're ready to put an offer in, and then you have a live deal and nothing backs up what they're telling you.
Right.
And then all of a sudden you're in a bad situation. So we want to make sure that buyers are in the great situation to be like, yep, I'm going to go ahead and buy. And that starts with getting your documents. Now, some people can say, well, do you really need that? Yeah. You know what?
If you want the more the better, right? The more they can provide, the better it is. It's like telling a story, essentially, right?
Exactly. Exactly. So I want your income documents. I'm going to want your T4s. I'm going to want your NOAs and, you know, a job letter. The job letter is going to be important because you need to confirm the income. Again, backing up the story, saying, this is what I have to present. And
what kind of information do you like to see on that job letter? Just so reference for people who are watching.
On the job letter, and we would have it updated. So in your pre-approval, you're going to have one that's recently, like within 30 days, but before closing, you're going to have an updated letter just to make sure they like it within 30 days.
Right, just so whenever you got your pre-approval, when you get to that point of closing, which we'll cover later on, it just matches what they gave us originally then, right?
Yeah, yeah. So when we talk about income, we want to, you know, T4s, NOAs from the last couple of years, a couple pay stubs. That's going to confirm. So what we do is we then take that information and we have bunch of different tools where we can verify, okay, this is confirming that you're going to make what you made last year, right? Because that's important to know what you actually qualify for.
Now, would you say you want more than 2 years? Like, what would be the magic number for you?
2.
Okay, 2 years would be the magic number?
Yeah.
Okay, that's good to know.
Yeah, if you're business for self, there's different programs available. You have stated income. You're not going to get a pre-approval for stated income.
Okay.
So, but they have different programs for that. If you know that you want to buy, then you can run it by your specialist and they would look at it saying, okay, based on your 6 months bank statements, we would be able to go, we would be comfortable you going ahead and putting an offer on something like that.
Okay. Now, let's say I'm a buyer. Okay, you know what? I've gone to my realtor or I've come directly to you. Either way, ended up with you. Okay, I want to buy the house. I have what you said. I have the income. I have the documents. I provided this, this, and this. What do you need next from that?
So, confirmation of your down payment.
Okay.
90 days in an account. Don't be moving money around.
Okay. Let's say
leave the money where it is.
Exactly, right? So you gotta leave it where it is. But let's say my parents are gifting me the money on closing. What do you need from that? Because we're seeing lots of that now where generational wealth is being passed around. Let's say that's the situation. There's grandma and grandpa or mom and dad. What do you want us to do with that?
So let's say that the closing is going to be like 120 days.
Okay.
They like to see 90 days in an account.
Okay.
So if somebody's looking now when they're going to close in August, we'll make sure that, okay, transfer the money now, get the gift letter signed, leave it in that account.
Okay.
Don't be moving around.
So a minimum 90 days, that money's got to be in your account, whoever's on title for the purchase, correct?
Yeah. Now it could stay in a parent's account, but they would have to have proof, right? So we've had a situation where the parents were gifting the money, they took it from a fund.
Right.
We had to provide proof that where that fund came from. Yeah, and we're like, don't move it. But then they moved it. So you have to backtrack 90
Right.
days. So wherever you have the money, you could have it in 10 different accounts. They're going to want 90 days proof of that. So if you know it's like 120 days, put it all in one account, and then you're going to have your 90-day history.
Right. Because if you move it within inside that 90, they're going to want the paper trail for, obviously extreme situation, but if you got it in 10 different accounts, they're going to want the paper trail 90 days out for all of those 10 accounts.
Exactly.
That's
and
wild.
Crypto. We're not going to get into big with crypto, but
No.
if there is money coming from crypto, make
Right.
sure it's in an account, and you're going to have 90 days history from it.
Okay. Wow. It's pretty intense stuff that you guys got to go through. So now that we've gone through, okay, your money's got to be in your account in 90 days. Documents, and then more documents. Perfect.
Yes.
So
2 years.
2 years of those documents. So lots of documents. So once we've gone through that process, you verify all those things, what do you do next with the client inside of that pre-approval process? Like, how do you produce that letter saying, okay, John and Cindy or whoever they are, they're proof of this number based on everything they've given you? How does that work?
So it's not always a letter. Some people may prefer a letter, but it's not always a letter. It may be, we have communication between you and the buyer, and we're like, okay, this is what we've done. This is who we're looking at going to, and they are pre-approved. We've gone through their documents. They are good to go.
Okay.
And it's a verbal.
Right.
It's a verbal communication saying, okay, as
So you
long
don't
as
provide,
nothing's
you
changed.
can provide something in
You
letter,
can.
but mostly it's verbal?
Yeah.
Okay.
Yeah.
Now, when you're going through, you've collected this, when you're taking all that information, like, who are you shopping it to?
It depends on what they're looking at. If they're a first-time home buyer, well, then you have an insurable, where you have to go somewhere where you've got CMHC, Sagen, or Genworth. It's insured,
Okay.
right? If they're going where they have 20% down, well, then it can be insurable, where the lender is the one who provides the insurance.
Okay.
Yeah. Or uninsured if it's over $1 million, if it's a rental property, or so forth.
Okay, because I think there's a big misconception too, even when you join that pre-approval process, it's like, all right, well, if I go to a broker, because most buyers, they talk to mom and dad and they go to the bank. They go to your RBC,
Yeah.
CIBC.
Where their parents have been banking for years.
Exactly. So I think there's that misconception that I'd like to probably address here in this as we're talking about the pre-approval process. Can you shop to the big banks as well?
So we do deal with TD, Scotiabank, and some of our other, we call them monoline, right? Because they only sell mortgages or HELOCs.
Right.
They're actually funded by the big banks.
Oh, so you have access to the big bank money essentially when you're going through that, right?
Yes.
Okay.
But without all the other stuff. So what I would say is, if I have a client, you have a client that's pre-approved, we're like, okay, you're good to go. I know that at least I have 3 lenders that I'm going to send it to once it's a live deal.
Right. And then for buyers out there, the good thing about that, if you take that into consideration, you've done all this, you've filled out a credit application. Helen's gone through all the work. She's pulled your credit. She knows she can verify the information. She can take your file and shop that to 3 or more different lenders. Whereas you go to your big bank, every time they do that, it's a negative hit on your credit, correct?
Oh, there is a bit of a misconception about that. Usually,
let's address it.
So let's say that you have gone to 2 banks and maybe 4 mortgage agents.
Right.
And it's within a 45-day period, and you could have multiple hits. It's not really going to affect your credit.
Okay.
Maybe a point or
It's a
2.
misconception, right?
Yeah, like if you're under 500 and you have a bunch of those hits, that is going to hurt. But
Right.
if you're 600 or above, those within that period are not going to hurt because they're shopping for a mortgage.
Okay. And then when you're going through that pre-approval process, gaining all your documents, everything there, what kind of credit score do you find those A, B lenders are looking for right now? Like, what's kind of a minimal threshold you'd really like to see?
680.
680?
That is really good. Scotiabank, TD, you're going to have no problems with those.
Okay. And then
as long as your utilization, obviously, that's important too.
Right, exactly. And then for people who are going through that same process, maybe they've had a job change, but they've got documentation for income from previous jobs for, let's say, the 2 years. The current job they're at, what kind of timeline do you want them to be working that job before they come see you?
So what's really interesting about that is if you have somebody who was maybe a nurse and they were a nurse all their life, and then all of a sudden within that 2 years they changed to be a firefighter. Well, that is going to have an impact to like your big banks and where you're going to go.
Right.
But if you have somebody who's staying in the same industry for at least 2 years, then you're going to be able to switch your job and still be able to have an A lender.
Okay.
In most situations.
Okay, it's just good to know because, in this world, everyone changes jobs and fields all the time. So, again, if you're looking at buying and you're early on in that process, but if you're in the same job, same industry, that's good.
Yes.
If you change industries, just making sure you got enough documentation to back that up. That's where the job letter can come in and probably help a little bit, I'm sure.
No.
No. All right.
The job letter is just basically verifying that you're at this place. You have guaranteed hours, what your income is, what your position, how long you've been there.
Okay. All right.
So the job letter doesn't really help if you need the job letter anyways, but
Right.
it's not going to help if you're under 2 years
Okay.
employed somewhere. But then that's when you have some alternative lenders.
Right.
Right.
Which then you as a mortgage broker or the mortgage coach, you guys have access to those alternative lenders
Yes.
for people who are in more, let's say, unique situations.
Yes.
Awesome.
Yes.
So now we've gone through the mortgage process. We've verified our down payment. We've documents, more documents. They've been there 2 years. Everything kind of checks out. You've shopped it with the lenders. They've given you that verbal pre-approval,
Mm-hmm.
or if you can do it in writing, however it comes through. How long is that pre-approval good for? So like with me, when I'm shopping with clients, I have buyers and our searches can last between, you go out the first day, find the perfect property. Doesn't always happen that way. Or you have clients that I've dealt with for months and months on end. As again, we're searching for a unique property or the market conditions. There's always different factors. How long is that pre-approval good for?
So it definitely depends on the lender and where you're going.
Okay.
So you can have up to 120 days. That's like the longest time that most of them usually tell you can.
All right, and with that includes like their rate hold and stuff like that, right? That's all included in that pre-approval?
In most cases, yeah.
In most cases, okay. It's good to know that.
Mostly for A lenders. B lenders, you're not going to find that in B lenders.
No, so the rates will adjust for the B lender based on when you're closing.
Right.
Okay.
Yeah.
Now you've gone through this. We did the pre-approval. We've done everything great, perfect. Let's say it's expired. Now to reapprove, do you need everything all over again, or can we use the same file information? Like that's something I'm sure people have no idea about.
Yeah. So like if you provided the documentation now in February,
Right.
and then like up until August, you still hadn't found anything, well, your NOAs, your T4s are still going to be the same. Just 2 updated pay stubs and a recent job letter. And
So it's pretty easy to redo it then.
Yeah.
Okay.
Oh yeah, for sure.
Awesome.
For sure.
Now, is there anything else you'd like to add in terms of like the pre-approval process and all that you think the consumers out there should be in the know about?
I think it's really important because if you don't do that step and all of a sudden you're in a live deal, and then that's when things can blow up.
Right.
Because you're in a legal document, right? You can't get out of. Somebody's going to get sued if they don't go ahead with that.
Well, only if they don't close. If it's the right now in the market that things have changed, which is great, there is that financing conditional period. But
Right.
to ask you to do what you just explained to me in 7 business days and get a firm approval, that sounds a little outside the box. Like it sounds a little tight for time.
Okay, but let's say that you have the deal signed and all of a sudden you're like, you have your 7 days, or you're like, no, this is really strong. I'm only going to do 5 days.
Right.
All of a sudden in 5 days, that's when the file blows up because
Right.
the documents didn't back up the story.
Right.
So that's why it's really important to have this done ahead of time. Then you don't have any worries. I mean, there's always hiccups along the way, but usually you're pretty good. Unless
Right.
there's something with the property, it doesn't appraise properly or whatever.
Okay. Yeah, no, totally makes sense to me. So again, everyone, documents, biggest thing. If you have to renew them after the expiry, just make sure you're keeping pay stubs, simple information, new updated job letter, stuff like that. I think the big thing that Helen and I are kind of preaching here from my side as a real estate agent and her side as a mortgage professional is if you're looking, like if you find yourself right now, you're on realtor.ca scrolling through and you're actually thinking of buying, or you may be, go submit your documents, go get that pre-approval, talk to the mortgage broker, because then at least you have 120 days of knowing, okay, you know what, if I want to make a move, I can in the next 120 days. This is the information I know, and they have your file already going.
Yeah.
And again, if you're going to extend that a little bit longer, then you can update your documents. I think those really good things to know, because I guarantee there's lots of buyers out there, and I've dealt with them before. They come in, no, I'm pre-approved, or I make good money, I do this, or money's no issue.
Yeah.
And then we run into the issues in the deals. Then we're asking for extensions, deals fall apart. It's just not a good experience for anybody out there. Would you agree?
No, the stress load that you carry from that. Or if there's a hiccup on there, let's say you're like, yeah, I'm ready to go, and there's something on your credit that you didn't know. Well, a little bit of time can help make that better. But at least you know ahead of time, as opposed to, yeah, everything was good, but then the lender looked at your credit and they're like, yeah, there's no way we'd lend on this, but we didn't know because we didn't look at the whole picture ahead of time.
Right. So yeah, painting the clearest picture you can. And again, do that early. Do that first. You know what? If you want to call your real estate agent, look at a house, there's no issue with that. But in that conversation you're having with your realtor, or your realtor should have with you, is okay, did you talk to your lender? Did you talk to your bank? Have you got that pre-approval? Again, it helps me do my job. Obviously, when you do your job, it makes deals come together. It makes great experiences. It makes the process very simple and smooth. So I think...
Sorry.
Yeah, no, take
I was just going to say, and the whole purchasing process is much better when you have your purchaser and your realtor as well as your mortgage specialist all working together towards that common goal of getting you what you want, right?
Yeah, exactly. That makes perfect sense to me. Like when we're pitching it to clients and you're out there looking, like make sure you got a team with you, and that team doesn't have to be this mega team of all these things there. It just needs, you need a good realtor. So make sure you're interviewing your realtors, asking the right questions. Make sure they're local realtors as well, or at least they know the area. Make sure you got a good mortgage broker or mortgage agent in your corner, done the pre-approvals, got everything in line, has the file complete. And then from there, you want to make sure that that realtor or mortgage broker, they have the lawyers with them, inspectors, all those things. You want to have a good team. Again, like what we're talking about today is the pre-approval and how important it is. So I really appreciate all the information you've given us.
Thank you.
Hope everyone else enjoyed it out there. That's the pre-approval process. Next month, we're going to go over next steps in the entire mortgage process. So now we've got a deal on the table, it's live, and what the process is after. So if you like the information, you like the video we did today,
subscribe.
Yeah, please like and please subscribe to the YouTube channel. And again, if you have any questions or anything about real estate, all my information is in the details below. But Helen, what's the best way to reach out to you?
You can reach me at 705-430-2417 or helen@themortgagecoach.ca. Love to help you out.
All right, guys. Thanks for tuning in. Helen, thank you for your time, and we'll see you guys next month. Take care.
Bye.